everybody's doing pretty good, right? When I stated about you having a checklist in regards to your executions, right? I pretty much meant you something like this, where now you could initially try to toggle and state whether you're bullish on this time frame, bearish on this time frame, bullish on this time frame, and so forth and so on, right? This is what I meant, right, in regards to you having a checklist. This is how you keep in track of your specific bias, right, in regards to your execution, right? And then this would be initially the perfect time frames to initially say for you to have fruitful trades. But bear in mind, these only work when you are within large distributive price conditions. You understand? Ranges and accumulation ranges require the low time frames, like the 1 minute time frame and so forth and so on. And not everybody is initially able to trade this specific time frame, right? So they will have to pretty much learn how to identify when this is likely to fail, so that you don't partake. You understand? That doesn't mean you need to start trading the 1 minute. Just learn when to avoid trading this. It's initially the game of this industry, guys. Understand the model or have an approach in regards to what you want to do or trade, right? And then start studying everything else around it that initially may be problematic. You understand? Above, looking for an execution or reason to trade, right? The most crucial thing is going to be you learning when not to get involved. You guys don't understand. It's very crucial. It's very, very, very important. You understand? But with that being said, so I'm gonna try breaking down today, right, in a way that I'm just trying to make a little minor lecture also in confluence of today's price action, because I feel like it's gonna be highly fruitful, right, in regards to this right here. Okay, so pretty much, I'll try having this set based on that. And today, well, today's Wednesday. Now today's still Thursday. Okay. So just me providing you this at face value, right? All you are pretty much looking for, right, would be your closest in proximity time based PDA, right? And you're going to utilize that as a supporting structure for your direction and buys. You understand? For example, we pretty much opened within the range, right? This range right here. Pretty much opened within the range of Thursday. And I told you guys, I personally either want to start seeing price, try to spool to the upside. This range right here. It's still my points of interest, right? It's still what I'm looking to see. And I'm looking to see price go. Unless tomorrow, which is Thursday, because we already on Wednesday, right? Unless price opens below this candle's low, right? Then that's just gonna make everything highly problematic, right? But for now, I am still bullish, even though price has not taken off as of yet, right? I am still bullish, right? Okay, so we pretty much have this in line, right? And we could pretty much say, okay, the daily time frame just of this right here is bullish, so perfect. I trade the AM session, right? Which session do I trade? There's the AM session. It's pretty much the session I trade, right? That means one thing I need to understand about the daily time frame, this time frame, the move of this, right, can happen anywhere within the day, meaning it can happen during, right, the Asia session, right? It can happen during the London session, right? It can happen during the AM session, right? It can pretty much happen during the PM session, right? That's one thing you need to understand about the daily time-based PDA, right? It's gonna be influenced at any time, right? So now what do I look for? I need some form of alliance, right, in regards to the session that I'm gonna trade, right? This is where the 6 hour comes in. If I go to the 6 hour, I should probably have this marked out on the daily time frame, just so it can be easier for us to define the range, right? But now let me just fix this. Right. So we'll have this marked out, right? I'm gonna mark it red using quarters to initially identify it, right? Right. Now this is the range right here, right? So if I go to the 6-hour time frame, right, I'll come here and also do something like this, right? Like that, right? Because I know this is where the candle is gonna open, right? If I go to the 6-hour time frame, right, ahead of the AM session, if that's the session that you're trading, there's not gonna be a need for you, right, to be looking anywhere below the 6-hour until 6 a.m. initially presents itself, right? There's no need for you to be doing so, right? Okay, so we pretty much have this right here, right? Pretty much have this dealing range right here, and this is gonna be symmetrical, right? For Tuesday is a symmetrical time, you understand? And likely price is gonna open, right, at the closure, right? At the closure of Monday, right, is likely to be, right, the open of the Tuesday candlestick. You understand? This is what's likely to open, if that makes sense, guys. Now, one thing you need to take note in regards to that, right, is price in this given range, right? You're focusing here. Remember, you're trying to find your bias for your session, right? Day is bullish, right? The day is bullish. You're trying to see if the 6 hours is in alignment with your narrative, right? Now, you have this right here, which would be the Asia candle open, right? Not the session open, the candle open, right? Then I'll mark this out, and then we'll have it in black, right? This is the candle open, meaning as long as price opens below it, right, it's likely to initiate lower prices, right? That's what's most likely gonna be presented, right? And then now, within the same exact day, one thing you will notice is we have this right here. I also stated this to you guys yesterday, right? When I was adding on in regards to the daily review for today, right? It's on Telegram. This right here is the AM, right? It's the AM session candle open, right? And the price initially opens above both of these, right? If it opens up above both of this, it will initially be determined to go high. If it opens below, you don't see price spool to the downside. And if it spools to the downside, what does that mean? That means it's not in sync with the daily bias. You understand? It is not in sync with the daily bias, right? But now, the Asia session, right, is not in sync with the daily bias, but the AM session is likely to be in sync with the daily bias. Why? Because I'm still stating that the true day open, the true Asia open, right, candle, the 6-hour candle is likely to open within this range. Why? Because it's this candle, right, which is 12 o'clock, which is the PM session of Monday, right, closed within this range right here. Closed within the range, right? So it's likely to open within it, right? Okay, I can increase this. What does that mean? We have the AM session, right, initially supporting higher prices. It is in sync, right? It is in sync with the daily bias. So what does that mean? You want to utilize this range right here to expect higher prices, right? And you'll regard the AM session, right, as problematic because price is in time distortion between the two. What I mean by this is in sync with the daily bias. This is problematic. Depending on the type of volume you will initially be presented, right, during the Asia session, right? You can utilize this to look for higher prices, even if you are targeting, right, targeting short-term liquidity. This liquidity high is right there. Even if you're targeting those, right, or even the new week open gap, right? You just have to understand that this right here is gonna be very problematic. This right here, it's gonna be very, very problematic. You can take the trade and say, okay, I'm taking this trade, I am long, right? But I understand that price could utilize the Asia session, right, to do what? To initially send price going lower. So for me, how I personally approach this is, even when we are exposed to conditions like this, because in reality we always are, right? It's just different spectrums of it, right? Meaning it's present on different time frames, initially less influential than others, right? I still take the trade, right? And as soon as price reaches the Asia session, right, I become a bit more aggressive with my management, or I try to ensure that I am in break even. Why? Because price is most likely to invert. I won't kill the trade. I'll be aggressive, or I'll try to move my stop to break even, right? With expectation of this being problematic, but price still continuing to the upside. You understand? So in this case, if you pay very close attention, right? Price opens. We need to wait for it. Spools to the downside. When you see this, most people, whenever they start seeing this, they be like, okay, my idea of looking for higher prices has failed. The idea has not failed until the candlestick closes like that on the given time frame that you are going to be trading. You understand? It doesn't fail until then, right? Meaning this candle needs to close and the next one needs to open before you can state that this idea has failed, right? Then we pretty much start seeing price spool to the upside, right? What does it do? It utilizes what? The AM session, right? It utilizes the AM session as what? As the leading driver. You understand? This was in sync, right? Meaning we're bullish using the AM. Okay. Meaning we were bullish utilizing the AM session, right? So this too is bullish. So now, if I am to ask you guys a question, right, in regards to all of this, where within the daily time frame would you state that the bullish move that was in sync with the bullish bias happened? I pretty much say it happened during the Asia session. And guess what? We are AM session traders. We need to be trading here, not here. We're trading here, not here. This move right here was in sync with the new week open gap. Does it make sense? It was in sync with the not the new week open gap, the new day open gap, right? It was bleeding in volatility from that volume injection, not 930. You understand? Two completely different things. So this move that you are seeing right here, right? This move, this candle right here, right? This is the move that you always want to see during the AM session, not any other session. Whenever it happens at any other session, your daily bias has already pretty much happened beforehand. You understand? The reason I pretty much tend to stay bullish even when this happens, right, is because I'm expecting the rest of the candlesticks to be continuous of this, and for that to pretty much happen, right, this candlestick's low, right, it needs to stay untouched. this candlestick's low needs to stay untouched. You understand? It needs to stay untouched. Whenever you see price drawing back into the range, right, you trying to look for a move again to the upside, it's going to be initially very difficult. Why? Because chances are you're within a very stagnant trading condition. What does that mean? It means you are most likely within a range. Whenever you see price or executive sessions pretty much in close proximity like this, right, you know that you are within a range, right? Price moving straight like this or straight like that, right? They do not have the highs and the lows within close proximity. What I mean by this is you don't have okay. You don't have the AM session open, right? Spool to the upside, spool to the downside, and stay within the range, right? And then you have the London session also open, spool to the downside, spool to the upside, and then stay within the range, right? You pretty much are having a pattern that's happening here, right? Price is failing to leave this dealing range, right? And that's initially what would happen if price initially went back down to spool back up. You understand? That's why this low always needs to stay untouched, right? If this move to the downside was initially probable for Monday, this high had to stay untouched. Why? Because we had this right here. This is 6 a.m. This is 6 a.m. So 6 a.m. Thursday, right? For 6 a.m. Sunday, right? I could pretty much say this is the Asia session of this is the Asia session of Friday, right? And this is the Asia session of Monday. So price initially begins this distribution during Asia of this move right there. And for this move to the downside to stay in sync, right? The high needs to already be left untouched. Most people, they struggle with this because all they're pretty much going to be looking at is the 6 a.m. candlestick, right? And they completely disregard what had initially happened beforehand, right? Meaning they do not look at the midnight candle, which is the London session, or they do not even look at the Asia session, right? Because you'll see most of the time volatility is interchanging. You're always going to have 2 out of 4 candles within a daily range that are more volatile than others, right? Meaning out of all 4 sessions within the day, you're going to tend to have 2 that are cleaner from a distribution perspective, right? So pretty much right now, we can say daily was bullish and then the 6-hour cycle was bullish, right? And this happened during the Asia session. So the move had already initiated itself, right? I'd expect some form of a continuation to happen during what time? During the London session, the AM session, and then the PM session, right? But now you need to start evaluating and identifying what? Time-based PDAs that align with that narrative, that are symmetrical and semi-symmetrical to that time. So right now, your focus, right? Your focus is midnight. And midnight, that is what? The London session, right? I can pretty much come here and set this to London session. I'm having all cycles off, right? And then let's have this outline everything. Okay, perfect. Can you see you have one here, with another one there, with another one there, with another one there, with another one there, another one there. For all of this, remember, you are having everything off. The reason why most people do not see these things is because, in honest reality, right, they are lazy, right? Laziness does not provide you progress. Why? Because you are always going to find or try to find ways to cheat the system. And the problem is with that, you're not really gaining experience. All you're looking for is convenience. Those are 2 different things, and they present you with 2 different outcomes. You understand? It's initially what separates the winners from losers, right? Laziness, right? You can be lazy right? As soon as you understand what you are doing and you've gained experience, right, to a point where your workflow, you can systemize your workflow, but you can't do that before you even understand what you are doing. There's process and there's ways initially to go about this, right? And most people are gonna try to cheat in regards to this. Why? Because they're trying to make something easy before they even understand it. You understand? Because when I talk about experience, right, I'm not talking about you learning initially more information, right, or you pretty much finding multiple ways to partake within the markets, right? I'm basically talking about you, right, initially understanding your routine and initially advancing within the principles and approach of how to implementate what? Your routine. Basically, you are improving your workflow, you are improving your approach, right? And for that to happen, you need to be doing the exact same thing again and again and again, and evaluating when it wins and when it loses, when it passes and when it fails. Most people, they avoid this, and it's gonna creep into your results. This is when psychology initially starts hitting you, because you're trying to advance in something that you pretty much do not understand. You understand? And that's not the way. It's like trying to run before you can learn how to walk, right? These things need to be very systematic, right? Me personally, to find a bias, right, it can even take me up to like 30 minutes to even 45 minutes, sometimes even an hour, right? It's actually the reasons why most of the time during the London session I'm pretty much quiet, right? It's because I am trying to analyze and see specific possibilities that could present themselves, right, during the AM session. Some people will just pull up, right, at 9 a.m. and look for a trade for 9:30. There's completely no routine that was utilized for that, right? You have not pretty much looked at and out for all potential possibilities, and that's gonna creep in to your results. That's gonna creep into your routine. You understand? They just see a PDA. Okay, there's a PDA right here. Bam, I'm going long. Sometimes it's gonna work. Most of the time, it's gonna fail you. Why? Because you fail to prepare. You understand? You did not look at all the possible outcomes beforehand. You didn't prepare for them, right? Okay, so London session, right? You don't just hope for the best and expect London session to continue just because the Asia session had initiated, right, the move to the upside, right? And even though I'm stating the day is bullish, right? The day is bullish, yes. The move happened during the Asia session, right? The daily bias will drive the daily move, right? And understand that move can happen at any time. We want it to happen during the AM session, but unfortunately it happened during the Asia session. So it was leading. What does that mean? We had a large expansion right here, right? We pretty much had a large expansion during the Asia session, right? That means we have 3 other sessions left. And out of all these 3 sessions, we are likely to get another large expansion. Doesn't necessarily have to be like this one, right? Another large expansion, right? During what time? During the London session, the AM session, and the PM session, right? These are things that you're always gonna need to have behind your head. Most people, they do not listen for this because they want fixed and systematic approaches, but they forget about the routine that's required outside of this. Understand? I'm not saying I'm expecting everyone to just immediately have this, right? You need to be seeing this multiple times. You understand? Some of these things I've pretty much mentioned, but for you to experience them, right? That's when you remember them, right? But yeah, so London session, right? What do we pretty much look for? The day is Tuesday. What would I be looking for? Firstly, I'm looking for Tuesday, right? The closest in proximity Tuesday range. No, not Tuesday, Wednesday. No. It'd have to be Monday because our dealing range is this one right here, right? It's this right here. I don't know why that is. Probably got this mixed up again, right? Because this is supposed to be Tuesday. But when I say Tuesday, it clicks on clicks on Wednesday, because this candle, can you see it forms on Tuesday, right? But either way, it's fine. You wouldn't see this if you did not focus, right? You would most likely have not seen this if you had not focused, right? Okay, so this right here, it's the London session, time-based PDA, right? And we are pretty much likely to open at the closure of the Asia session, right? This is still bullish, right? What does that mean? London session, we're still looking for higher prices. Now, you don't just have this narrative and be like, okay, that means now I can start looking for longs. That's not how it works. You need to look for reasons why your execution might not work. And if you can't find those reasons, that's when you wanna push the trade on your demo account, right? You're gonna push the trade, right? Execute, right? So we pretty much have this right here, right? I'm gonna try to remove this because now we understand that the Asia session utilized this right here, right? Which is pretty much this. Then I'll just make this, I'll make it white, so we know that that's the area we need to be focused on, right? For the daily range, right? Let's just make it gray. Just a darker tone, right? We know that this is the daily range we need to focus on, right? This was the move that initiated itself. So it was the AM session, right? Look, 06 AM for 06 PM, right? Semi-symmetrical times, right? It's that simple. Semi-symmetrical times, right? So yes, we could say we're looking for higher prices just off this right here, right? But now we need to look for reasons for why price might fail to reach this high right here, and even that one, right? I can't just wait for the candle to open and start looking for longs. It doesn't work like that, right? So now I can pretty much say the semi-symmetrical of Tuesday would be Thursday. If I click on Wednesday and this thing clicks on Thursday, and it does, okay, we have this right here, right? At second closest in proximity, right? If I enable line 2, you will see that it's second closest in proximity. So therefore, this 2 days, right, are initially supporting higher prices. It's perfect. We can look for higher prices, right? But now, I stated you want to look for PDAs that are initially going against what you are looking for. Both of these are not. Both symmetrical and semi-symmetrical days are in sync with what you want to look for. So what are you doing? You now enable the other days that are initially not semi-symmetrical, right? And one thing you'll notice is we have this right here. This is Friday, right? With Friday right there. Mark them out in red. And we have this right there. I just want to confirm it's open. That's right there. So our dealing range right now, right? It's pretty much from this right here. It's pretty much from this, right? From this right here. Even if you marked out that one, it wouldn't really matter. Why? Because they both are in sync. They're supporting the same narrative. Even if you saw or utilized this one, it wouldn't really matter. That's why I tell you guys that sometimes it doesn't mean you have to find the closest in proximity time-based PDA, because most of the time there's going to be PDAs that align with the one that's initially close in proximity. You understand? That's the beauty about time, right? It doesn't necessarily only look for one PDA at a time. It looks for multiple ones, right? Okay, so first initial reason for why price is not going to go to the upside, or it's gonna have a hard time going to the upside, right? It's gonna be pretty much this right here and that right there. Even if I utilize this one alone, because I feel like it keeps the chart clean, right? We have this right there, right? Can be like, yes, London session, we are pretty much, 6 hour, we're still bullish for what session? For the London session, right? But now, this is going to be problematic, right? This too is going to be problematic. What time is this? This is 12 a.m., right? Okay, so now I'm pretty much going to ask you guys, between this candle's open, right? This candle, which is initially supporting our prices, even if you select that one, doesn't matter, whichever one, right? And this one's, right? And I can even enable semi-symmetrical, which is 12-hour lookbacks, right? Set this to 15, right? And then now you will see that it provides you with this PDA right here, which is this one and this one. Is also that one right there. Okay, so you're bullish, right? For the day, you're bullish. You're now within the London session. You identify a PDA within the bullish day that's in sync with what you want to see, right? Now, my question is, in this given time, would you be willing to take a long or a short? Or let me even rule out the short. Would you be willing to take out the long, right? Or sit still based on what you see right now? Okay, personally, I would state and tell you that you guys are required to become neutral. What does that mean? For the London session, you are neutral. Why? Because the closest in proximity time-based PDA out of all these ranges, right, for the London session, right, is this right here, which is Monday, 12 o'clock. And this is semi-symmetrical. 12 o'clock is semi-symmetrical for midnight. You understand? This is the closest in proximity price line compared to this one. Yes, this one is in sync with your daily bias, but this one is closer. And what you're looking for is always the first reactions, right? So now what do you think? What do you think the London session is going to do? So it's going to be two outcomes. It's either going to hover within the range, right? Meaning it accumulates, it closes inside as a very small candle. Why? Because you have two ranges, which is this right here, that right there, and this one right here, which is this right here, that are not going to be willing to let it go to the upside. The only time prices can be willing to violate any of these, right, is if internally, right, it finds smaller PDAs that are supporting higher prices. But now here's the thing. Those smaller PDAs require volatility for them to be consistent, meaning they need to be in sync with some form of scheduled event that you can identify for you to capitalize on, right? So London session, right, is bearish. So therefore, no trade. You are sitting still for this session, right? But now we pretty much see price open, draws to the opens, right? Tries to dig in, draws as deep as this one right here. You understand? It cut through this, it cut through that, and also refers to this one. That does not mean that these PDAs were initially invalidated or not respected. It just simply means their characteristics was to hold price. They were accumulative time-based PDAs, not distribution ones or magnetic ones. Meaning their rule is not for them to drive price to a specific direction. They are predetermined to hold price in one fixed range, right? You can see why trading here was way easier than you trading up there. Why? Because you had way more time-based PDAs that were problematic. And the beauty with this is your closest in proximity time-based PDA, right, was pretty much the semi AM session for Asia session, right? So in this case, price just initially hovers and stays within the range. Someone can pretty much say, okay, but I could have capitalized on the move from here to that wick, right? You're not going to be consistent with that, right? You could go to the low time frame and say, okay, that's a significant move, right? But it's within very high resistant conditions, right? This is not the type of moves you're trying to partake in. You understand? These are not the type of moves you're trying to partake in, right? So let me pretty much have this selected out like this, right? Yeah, perfect. Perfect. This is the type of range you are in. Price initially opens, begins to spool to the upside, goes down. It's just hovering, staying within the range. Staying within the range. Your distribution was presented and provided during the Asia session. That was the one that was in sync with the daily move. You understand? Okay. So now, if we go back to the 6-hour time frame, right? I'm gonna try to go back. Trading view. Excuse me. Right. Now we're pretty much about to be within the AM session, so I can remove all these annotations, right? But I still have in my notes that the Asia session was initially the driver, the London session was problematic, right? Now all that I'm pretty much simply doing, right, is moving everything again, right? No shortcuts. Now all I'm pretty much doing is I'm referring to the 6 a.m. candlestick on what time frame? On the 6 hour for my bias, right? For my bias, right? Okay, so right now, if I disable everything and set this to, it needs to outline this right here. This thing will surprise you. This right here. You see how far price is from that. It's very far, right? Then now if I enable this right here, it should initially outline this. And this too is also initiating higher prices. I'm gonna try to do this and set it to 50 minutes, right? Just so the range is a bit smaller, so we know where exactly. Let me just increase it 60 minutes, which is an hour. We know where exactly the 6 a.m. range is, right? It's right here. So there's two PDAs right here. They are supporting higher prices. So logically, we could say, perfect. We are looking for higher prices, right? We want to utilize Thursday, right? And we want to utilize July, right? Which is Tuesday, the 1st, right? For higher prices. It's perfect. But the rule still applies. You want to identify reasons for why price may not be spooling to the upside. Because you can say, okay, perfect. Daily time frame is bullish. Perfect. 6-hour time frame is bullish. I want to utilize this for higher prices and just start shooting and saying, okay, perfect, I'm long. And just let price run. But you're going to fail to understand why price fails to go that direction if you are not going to look for problematic reasons for why price is not going to be willing to do so. Understand? Okay, so pretty much if you identify this range, right, one thing you're going to notice is we had this right here, which was the closest in proximity session out of between Tuesday and Thursday, right? But price is up here and it's likely to open right there, right? I'll move this like this, meaning the next candlestick is likely to open where the London session closes or closed, right? And for price to refer to this range right here, right? But it's still far from the what? From the true open. It's initially very slim. So what does that mean? This PDA open is likely to be utilized as a draw rather than a driver. You understand? So now this is when I begin to enable all the other cycles. The lazy ones just always have everything on. There's no routine, there's no process in regards to why and how they find specific things, right? And it bleeds in. It's gonna creep into your results, you understand? But now what do you see? We have this right here. And what is this? This is 6 a.m. Friday, right? It's right there, right? It's right there. And if this is supporting lower prices and this is supporting higher prices, I'm going to start sounding like a broken record. Between this and this, which one is closer to price? Or where price is likely to open? Between this one and this one, which one is going to be closer to price? If you measure from here to up there, how many points is that? 75, right? If you measure from there to here, how many points is that? 20.7. So we would all pretty much agree that this is close in proximity compared to that one, right? We would all agree, right? Unless my eyes are blind or I got like lenses on. I don't know. Maybe they're not working perfect. You understand? Or I'm seeing things, you know? Maybe I'm crazy, right? Now, note, this is the AM session, right? And the London session has already created a high right there. And it had referred to this, and this. So if this high stays untouched, what do you think is going to happen? That means a move has already pretty much initiated itself within this high right here. If you have a model or if you try to have a fixed approach for this, you are not going to see this. You are not going to see this. And to make it picture perfect, right, we are going to say it's this right here. Price refers to midnight of Monday. When? Midnight Tuesday, right? In confluence of this right here and that right there. You understand? So these right here, 1, 2, 3 were supporting low prices. And if this high stays untouched, which is the London high, you'd pretty much expect the AM session to be a continuation of that, right? And in this given case, what's happening? This right here, Friday AM session is way close in proximity to where the AM session is likely to open. So what are you going to want to see? You want to see price potentially utilize this right here for low prices, right? If I mark this out like this, right? And I mark this out. No. I need to get used to this keyboard because it's not a Mac keyboard, so it feels very weird. I'll say this is the AM session. You guys are probably gonna have to rewatch this multiple times. It's very crucial, right? Then now you also mark this out right there, right? Okay. Now let's say you did not even see the Friday. You could still have referred to the Monday range, right? Or let's say you didn't see any. You could have still referred to what? Sunday, which is the Asia session of Monday, right? Why? Because they are both, all three are supporting one narrative. What does that mean? You could find PDAs within any one of these to align with what you want, with what you are looking for, right? Now, the 6-hour time frame, right, of the AM session, right, is bearish too, right? It's bearish too. It's just like London, right? What is price likely to do? Either stay in one range or distribute to the downside. Why? It's likely to draw to these PDAs. And people pretty much get hurt because they wait for price to draw to these PDAs and still believe that there could be more volume that supports higher prices, meaning they wait for price to draw to these and then react to the upside. I personally avoid that at all costs because yes, it's going to work, right? But sometimes what's going to happen with this is you might not have enough volatility to get you back up. So what you pretty much do get is price drawing there, and then just providing you, just like TGIF, providing you with just a 20 to like 30% retracement off the 6-hour candle. You understand? It happens, right? It's all gonna be initially dependent on volatility, right? Okay, so I'm gonna try to take us now to the 30-minute time frame, right? No, the 90-minute. I'm gonna try to take us to the 90-minute time frame. Well, let me use the 3 hours. Nah, the 90-minute is fine. It's the same thing. Okay. And then what I am gonna do is mark out 9 a.m. because that's gonna be the candle that we are gonna wanna utilize, right? That means this move right here had initially pretty much began at what time? At 3 a.m. This could have easily utilized 6 or 9, right? And then this was initially what held it, meaning price failed to go to the downside, right? At 3 a.m. just because of this. And it failed to go to the upside because of this and this. That's why the candle closes within the range. It stays within time distortion like this. I wish you guys could like see this the way I see it. I don't know. But yeah, it's this right here. And pretty much this one above, right? That's why price struggles to go to that side. Even this right here, this and this, they are still problematic, right? I don't even have to mark them out utilizing the indicator because I can see this. There's a range. This is what I meant when I say it's very problematic to be trading within ranges. Understand? So now I'm gonna try taking us to 9 a.m. because that's when we wanna partake. Just wait a minute. Okay. I'm gonna remove this real quick. That's where you're gonna be expecting volatility, right? So this would have been right there, right? Remember what I stated to you guys, right? About the high. If it stays untouched, chances are the AM session is going to be a continuation of London. You understand? This is where the high forms. It's not in sync with the daily bias, but it's in sync with the 6-hour cycles, not the daily time frame, right? So we are pretty much about to have 9:30, right? I'm gonna remove this, remove that. Okay, no, let's leave this, right? And remove this and that. No, let's leave that there, right? Okay, I think I'll have that present on a high time frame. Meaning it needs to be at least and above, right? Okay, just remember this, right? Needs to stay untouched, right? Rewind if you're still confused in regards to that, right? So we're pretty much about to have the 6-hour candle, right? Note, it is likely to be the most volatile out of all 4 candlesticks on the 90-minute time frame. The same way we say we have 4 sessions within the day and 2 are likely to be highly volatile. It's the same even with cycles. If we have 4 90-minute cycles, right? Or time cycles, right? On the 90-minute time frame, Out of all 4 candlesticks, you're likely to have high volatility on what? On one. And when you do not have any red folder news event, the one you are likely to have the most amount of volatility on, right, is going to be the 9 a.m. candlestick. When you're having a red folder news event, the likely one is going to be the 7:30 candlestick, which would be this one, right? And if you're having 10 a.m., it would be the 10:30 one. You understand? But if it's still within 10 a.m., it would still be the 9 a.m. to 10:30, right? You need to have this predetermined beforehand, right? Until 9 a.m. hits, right, there will be no reason for you to be anywhere below the 90-minute time frame. Most people, they go to the daily and then jump straight to the 50-minute time frame looking for PDAs for price to react off. And then when they get violated, they start complaining and saying, this is difficult, this doesn't work, this, that, yada, 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 yada. Understand? But you skipped steps, right? You skipped a lot of steps, very, very crucial steps for you to get to where you have to be, right? Okay, so pretty much, right, we are bearish for the session, right? Remember, 6-hour time frame. If I just show you on the 90 minutes, say we're bearish with these annotations, it doesn't make sense unless I go to the 6-hour time frame and look for why it is bearish, right? The only reason I'll be willing to take a bearish trade, right, is if the 90-minute time frame also tells me we're bearish, right? Or any other lower time frame tells me so. Because it's going to be in sync with what? With the 6-hour. Like I said, we need at least 2 cycles for you to pull a trigger. Make sure that the PDA above the one you're trading is always in sync with what you're looking for. This is what I meant. Right. So right now, where are we? We're on Tuesday, right? What are we looking for? 9 a.m., right? We're pretty much doing the exact same thing. The only difference with this, right, is the fact that we are looking for these trades here, right? There, right? In fact, let me no. Yeah, let me just remove them. On the 6-hour time frame, just pretend they're there, right? Okay. Pretty much have this right here. We have that. And if I am to mark this one out, right? And I am to mark this one out, and I am to mark this one out, right? What is going to be the caveat? What's going to be the rule behind this, right? I'll mark this out as 9 a.m., right? Then I'll also mark this out as 9 a.m. Then I'll also mark this out as 9 a.m., right? Price is in between these two, right? The session is supporting lower prices. Why? Because price had initially opened below it, right? But it's 9 a.m. is not. So what does that mean? I can refer to any other 9 a.m. that's close in proximity, right? For a short. Does not necessarily have to be within the range. It's the same way with the days, where I can say Monday supporting high prices, but its session is supporting low prices, or vice versa. I can look for something elsewhere. You understand? Yeah. Even if I mark, okay, let's just leave it like this. Now, if you pretty much look at this right here, right, you are going to see that we have 9 a.m., 9 a.m., 9 a.m. That means this is for the next candlestick on the 90-minute time frame. Between this, and this, right, which one is closest in proximity? Unless my eyes don't work correctly, right? Unless my eyes don't work correctly. It's the it's the AM session, right? So it's this right here. This is hinting to you lower prices. if I measure from where, right, the new candle is likely to open. Remember, it's going to open where the previous candle closes, meaning the open of 9 a.m. is the closure of the 7:30 candle on the 90-minute time frame, right? So this way price is likely to open. I'll mark this out like this, right? So now, if you measure from here, going down to there, right, to that open, you'll see that it's 18 points, right? Let's mark that out. Let's just write that down real quick. 18.50, right? Okay, I'll say 18.50, right? And then now, if I measure from there, you'll see that it says 46.75. Understand? And if I say, if you can see from pretty much this one above, so it would have to be this, like this, right? You'll see that it's 11.50. Right. Guys, unless my eyes do not work, right? Unless something's crazy, unless I'm drunk or high or something, right? The closest or the smallest, right? I'll say closest in proximity would be this one right here. This digit is way smaller than the rest, right? It's way, way smaller than the rest. So this is the leading one, right? And what narrative is it supporting? Higher prices or lower prices? It is supporting lower prices. Unless I'm blind, unless I'm crazy, you know. So this is bearish, right? And I understand that these are going to be problematic. These are going to be problematic. So what does that mean? I still take the short, right? My first goal is for me to get myself to what? Break even. That's always going to be the goal, right? Okay, so now I'm going to try to refine this to the candle ranges, right? Because now we're looking for 9:30 specifically, right? If I go like this, it's going to be this, that. Then it's going to be this and that, right? It's the ranges. Let's use a different color just for them to be a bit more vivid, you know? We have that right there. We have that right there and that right there, right? There they are. I'm trying to trade here, right? That means my PDAs, before I look for anything anywhere else, right, it needs to be here or there or here or even there, right? So now what do? Go to the 30-minute time frame or even, right, the 15, whichever one looks nice to you, right? It's going to show you the same PDAs, right? It's going to show you the same PDAs. I just like the 30 because it makes everything easier to see, right? Now within this range right here, what are we looking for? Within this range right here, what are we looking for? This high stays untouched. Remember that. What are we looking for? We're looking for 9:30, right? 9:30. So from 6, right? What we pretty much did right here, right? On the 6-hour time frame, on the daily time frame, right? So that would be the 24-hour time frame. We looked for a daily PDA, right? And then on the 6-hour time frame, right? We first look for 6 a.m., right? PDA, right? So checklist. On the 90-minute time frame, what do we look for? We look for a 9 a.m. time-based PDA, right? Why? Because 9:30 is within it. Then on the 30-minute or 15, doesn't matter. What are we looking for? 9:30 time-based PDA, right? So this tells you you're bearish. This tells you you're bearish. You want to see this tell you you're bearish, right? If you were trading the 90-minute time frame, right, you could pretty much say, I'm going to use 9 a.m. to go short. That's perfect. It's fine. But you can't manage that on the lower time frame, like the 50-minute time frame. You don't want to use the time frame on the 50-minute time frame. You need to use it on the 90-minute. Same way, if you're going to identify PD on the 30-minute, you need to utilize it on the 30-minute. Why? Because I see people over refining, and that's very difficult to initially be consistent in, right? It's very hard, right? Okay, so right now we're looking for the 9 a.m. candlestick, right? I don't know, I wrote 8:30 there. It's supposed to be 9:30, right? Let's wait for this for 1. Perfect. Okay. So now if I start refining this, right, and I mark this out like this, and I mark this out, it's 9:30, 12 hour, right? Then I mark this out right there, like that, right? Then now I'm refining. I say this is the true open of what time? 9:30, right? It's the open of 9:30. Then what? This is the open of 9:30. So we have this one in check, which was bullish, right? But the 6-hour totals were bearish. The 90-minute totals were bearish, right? Okay, now we're trying to find out what the 30-minute time frame is telling us, right? That, and that, right? So now if I come here, right, and say this right here is the closure of the 9 a.m. candlestick. I'm on the 30-minute time frame, meaning the open, right? The open of 9:30 is going to be at the closure of this candlestick, right? We're doing the same thing that we did on the 90-minute time frame, and the same thing we did on the daily time frame, the 6-hour. Now we're just doing it for the 30-minute, right? If you measure from here, right, to down there, yeah, that is 17 points, right? Okay, this was for, I'll try moving this down like this, right? Like that. This was for the 90-minute time frame, right? Now we trying to get ourselves to the 30-minute time frame, right? First one, 17 points, right? Second one, 41.75, right? Then now the third one should be this candle right here, this 931. The open is way up there, right? So no. I'm just gonna remove this and then duplicate this to there. This is gonna be 21, right? What time is that? That is from here to up there. That is 19.75, right? Now, the one from here to right there, right? That is 8, right? Point, what time? 25. You understand? Now, if I was to say, I want to see if this thing can sort, right? Yeah, I don't know how to use this Google Docs. It's just like Excel, but it's a bit different, right? If if you pretty much look at these stages right here, right, and start sorting them from biggest to smallest, you're gonna see that 8 is the biggest. I mean, 8 is the smallest. 17 is the second smallest. 19 is the third. And then 41 is gonna be pretty much the biggest, right? See the pattern right there. So it's pretty clear that 18 points and 25, 18.25 points, that's the closest in proximity, right? And which one is it? It's this one right here. This one supports your narrative, supports what you're looking for. You understand? These ones are problematic. This is problematic. You understand? So what does that mean now? I'm still willing to take the trade, meaning I'm still willing to take the short, understanding that this one's going to be problematic. The only reason why I am willing to take the trade is because the 6 hours bearish, the 90-minute is bearish, and now the 30-minute, right? 30-minute is bearish, right? Then what does price do? It opens, right? And then spools to the downside. What does it do? It goes to touch 9:30 a.m., which was the one that was 8.25 points away. It's the closest one. It's the one it's going to utilize. Remember, this candlestick is going to last for how long? 30 minutes. What does that mean? That means this PDA is bearish for full 30 minutes. That means this move needs to happen within 30 minutes, not necessarily 9:30 alone. You understand? It needs to happen within 30 minutes. If I go to a 1 minute time frame, right? If I go to the 1 minute time frame, okay, this, okay, I want to mark out where 9:30 specifically is. 9:30. I don't know if my data spoofed or what, right? Because this telling me two different things. Yeah. It's 9:30. It's pretty much the 9:30 candle, right? Just try doing a bar replay from there. Latency, right? While it does that, let me just zoom in here so we still understand what we are initially trying to focus on. And if it doesn't, I'll just have to refresh the page. I don't know anymore because I'm on Chrome now. I tried Brave, I tried everything. They're all just highly problematic. It's like now bar replay is not working, but it's fine, right? That means, guys, this range, this whole entire range is bearish for how long? For 30 minutes. 9:30 opens right there, right? Price initially first draws to it. That means it needs to have utilized something internally to get itself there before it can begin to move to the downside. That means this could have easily even been a 9:31 move, right? 9:32, right? 9:33, 9:34, 9:35, right? You're not gonna know, and you're gonna have a hard time trying to figure that out on the 1 minute time frame because you're trying to have a way too tight stop, right? You're gonna hurt yourself like that, right? That's why I say stick to the 15 minutes. Worst case scenario, the 5. The 1 minute, you need to understand a lot of things. You understand? You need to understand a lot of things, right? So this range right here is initially still bearish. Price opens, draws to it, and then distributes to the downside. You understand? These were regarded as problematic PDAs, right? Meaning they could be the reason why price does not get any lower. But as soon as they move, right, your execution and your stop placement, right, they wouldn't even have to be within this highs. Why? Because this high needs to stay untouched, right? Can even place your stop within this highs right here, but frankly above the true opens. That's what I would advise for, because it could have also easily wicked to that one right there, right? That means even if you were trading this with the mentality of trying to get us down there, right? As soon as price provides you with displacement and it touches this 930 through open, move your stop to break even, and then just let price do what it's gonna do. You understand? Just move your stop to break even, and then let price do what it's gonna do, because it's gonna show you where it's trying to go. You understand? It just becomes way more complicated when you are too zoomed in, because you start seeing these fluctuations right here, and you start selecting random PDAs. You understand? This begins to overwhelm you. You understand? The higher time frame is gonna be your best friend in regards to this, right? Because it's gonna protect you from a lot of messiness in regards to your management. But one thing that it's initially gonna be problematic for you is the fact that if you're within conditions like this, right, you are gonna fail, right, to see price if it's not willing to get you down there, right? Because these things, reversals always begin in the lower time frames before they move to the higher time frame. I'm not saying try to look for reversals on the lower time frame, right? I'm saying that's where they begin. You understand? A reversal, even within an all-time high, there's a specific second, minute, and hour that reversal begins before it's a day or a week. You understand? That's initially what I'm saying, right? But yeah, guys, in regards to all of this, right, this is initially my breakdown for 930, right? I'm gonna be trying to be going in full depth like this in regards to breaking down this executions, right? The video is gonna be overly extended, right? But you're gonna require the attention span to have this, right? Because this is not easy, right? It's not easy. It is very, very, very challenging, right? And if you are unable to see these things, right, you are gonna pretty much get hurt. You understand? It's like people going into doing funded evaluations while still learning. That's a really bad mix, right? It doesn't make sense to be running before you can even learn how to walk. You understand? It doesn't make sense to me personally. It doesn't make sense, right? But yeah, hopefully you guys can create something like this for yourselves, right? Unless you guys want this Excel, I can make like a cleaner one, right? And then yeah, you'd pretty much have this as a checklist for when you are looking for an execution. Just tell me if you would like this, right? And then yeah, I'll try something for you guys, right? That being said, guys, hopefully you guys had a pretty good day, right? And yeah, hopefully you found some insight in this, right? Video was overly extended, right? But hopefully it made sense to you guys, right? With that being said, you guys have a good one. Tell them we're coming.